All right, there we go. Guten Morgen. It is just after 6:30 on Wall Street, 6:35, 6:36. Yeah, so about 3 hours before the open of trading. This is QuantBox Live, where we get our global macro on. We're looking at, technical trends. Most people start with technical analysis, right? Yeah, well, I wouldn't start there. In fact, when I first started trading, that was the last thing I did. So that's how I taught myself to trade. And 22 years later, I still start with QuantBox, looking at sentiment, inflation, employment, GDP. Sure. But that's longer term stuff, right? Well, it's good to know, right? It's good to know the long term. But then on the flip side, trade positioning and seasonality and sentiment and price action, everything on the shorter run, that tells you what's happening now, today. In fact, in the last few hours, what's happening. And so we're combining very, very long term and then some medium term and then some very, very short term analysis to get to our conclusions. And that's the whole point, that you have a conclusion to your trading before you start firing off trades. You have a strategy, you have a thought process, you have a bias. You know you're a bull or you know you're a bear before you even look at your chart. Otherwise, when you go shopping when you're hungry, you'll buy anything. And don't buy Cheetos. They're evil. Yes. Yeah. But if you do buy Cheetos, put gravy on it. Oh, for sure, eh? So anyways, look, organize your thoughts. Look how clean and organized that is. Bullish, bearish, neutral. And that's all dynamically updated in real time. Amazing. So YouTubers, visit quantbox.co, sign up. If you don't, well, that's you. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Raul, have you gone through the macroeconomics course? Make sure you do that. It's only 16 hours long. And then I need to redo this QuantBox. We've had so many upgrades in the last year that this QuantBox training course could probably double in length. Oh, Raul, you've made it to the 4 lectures? Yeah, so where are you? 1, 2, 3. Oh, in terms of trade, sweet. Let me look at it.
Boom. So, hey, welcome to Macroeconomics.
Whoa. Yeah. Cool. Yeah. Comparative advantage versus absolute advantage. Love it. Sweet. Yeah. I like that lecture. So, yeah. So, several examples. 51 minutes. Now I'm zooming out. Cool. Yeah. So it's just over an hour long. Sweet. Yeah, you know what? This lecture would be one of the first lectures in an undergraduate economics class. Yeah, that would be, when you're doing your frontier curve and stuff. Very cool. Right on. That's great. And of course, we tie it into economies, right? Very cool. Right on. I hope you enjoy it. Okay, let us move on. QuantBox Pro. Let me get some more coffee down me. I've only had one energy drink today. I got to get more coffee down my throat. Usually by now it's been 2 energy drinks. Okay, so let's take a look at the world today. 4.9, stabilizing here. That's good. That's okay. It went higher than this. Remember, like a month ago, we were at 411, and then 2 weeks ago, we were at 385, and now we're back to 411. Well, this is again, I said, look at that number as your gauge of what's kind of happening in the greater market. What does the market feel? The timing of the Fed cut that we're going to get. We're going to get it this year. No one disagrees with that. Well, we dropped to 3.85 because, much of the market thought it was going to happen in March. Wrong. We knew that, and I can still prove it, but we knew that 6 months ago that was wrong. Well, the rest of the market's just figuring it out now. Remember, our job is not to outsmart the market. You need to know what you think, which means you have to think, and thinking means you have to analyze something, right? So we can have our opinion, but I never want to trade against the market because I can't do that. So that's not, we're not trying to be so clever that we're smarter than the market, but we need to know what the market is doing. And the market a couple of weeks ago thought the Fed was going to cut. Now, doesn't matter if we knew they were wrong, they thought they were right. And so now they realize they're wrong, and the yield goes right back to 4.11, where we were previously, which actually makes tons of sense. Okay, so we're just back, and now they're trying to figure out, well, if it's not March, is it May? No, it's not May. But we got to wait around until they realize it's not May. How are they going to know? Fed speeches, Fed speeches, Fed speeches, Fed speeches. And they're going ape crazy right now because of, Jay Powell did a 60 Minutes interview. Was that like 2 days ago, 3 days ago? Honestly, it seems like 3 weeks ago. I'm thinking, wait, that was actually this Sunday. Wow, that's a long time ago. But anyways, Jay Powell came out on 60 Minutes and said, no, we're not going to cut. And then you're going to see lots of other Fed people suddenly just start doing speeches like, no, there's no cut. No, there's no cut. No, there's no cut. And so that'll push these yields back up. And then eventually they'll cut closer to the middle and certainly by the end of the year, right? So that number is just money going in and out of that market as people realize what's going to happen versus what they thought was going to happen. By the way, though, we had talked about at some point when the Fed cuts, money needs to move out of money markets. And I think, I don't know if it was a QuantBox presentation, but where like Goldman Sachs, for example, is offered to pay me 4.5, and I think it's now 4.85 if I just put money in Goldman Sachs, just cash. Not even an investment. They didn't even say, well, we'll put it in our money market. No, they're just like, give us the cash, we'll pay you 4.85. When the Fed cuts, that money is going to leave. They need, because when that number drops below inflation, so let's say that number 4.5 drops to 2.5, but inflation stays around 3. Now I have to move my money because I'd actually be losing money. And so all that shadow banking stuff is going to go away when the Fed cuts, and then it needs to go somewhere else. And right now, apparently, there is a discernible amount of money leaving these types of money market funds, and they're moving toward corporate bonds because people believe, a corporate bond, let's say a 5-year corporate bond paying you 5%. Well, if the Fed funds rate's going to drop, and therefore these money markets that are paying you 4 are going to go away because they're only going to pay you 2 or maybe even less, though you might as well lock it up now and buy some cheap corporate bonds because the price of corporate bonds are cheap and they're willing to pay you 5 or 6 or 7 for 5 or 6 or 7 years. So the money's starting, like it's already starting. Now, of course, most people won't see this, right? The average, in particular, Forex trader wakes up in the morning like, I want to trade euro dollar. But we're looking at some of these bigger trends, and that is starting to happen. Cool, because we're going to start seeing that in these treasury markets and stuff down the road. But I think smart money is already making the move because if you buy the corporate bond now, you're paying significantly less. When everyone else figures this out, you're going to have to pay more to buy the bond that pays you the 5%. Cool. So it's happening is all I'm saying. It's happening. It started. Okay. Something that didn't exist 2 months ago exists now, but most people can't see it. But the transition is happening. Very cool. Anyways, oil stabilizing. Cool. Remember, I'm a bull on that. Great. Gold's done nothing. Stock market's still, we're still trying to figure out our path. Euro dollar. Yeah. And Bitcoin. Meh. Okay, fine. Let's take a look at the risk gauges. Nothing. I'm so happy with this, by the way. It's been, 3 weeks, maybe 4 weeks at QuantBox. Every single day has analyzed these 6 markets on 3 different time frames. So let's just call that 18 different correlated measures to tell you there's no correlation. There's a positive correlation, there's a negative correlation, and we're able to see through all this market. And there's a lot of people are, the opinion on the market seems to be, more, how do you say it, divided and divisive than even politics in DC, right? Some people are like, no, the market's bullish. And everyone's like, no, we're going to go into recession. And there's like this, and we look at this and we're like, there's actually nothing going on. And this is an opportunity to adjust your trading behavior with the real world, actual investment opportunities that are hidden to most people. We can look at this and do comparative analysis of, the VIX, the yen, gold, treasury yields, the stock market. Like, we're really looking at quite a diverse, spread of asset classes that are related to each other, but not their moves, not right now. And that you should change your behavior. Everyone else is going to get caught up in volatility, trading what they think is going to happen. And what we know is there's no way to know. So if you're opinionated, it's not based on, short, medium, or longer term factualness. It's just an opinion. It's just a guess. And I don't like that. I don't think you like that. I don't want to guess with my money, especially if there's an equal and opposite reaction. Then I don't even know if I guessed right. Am I going to win? This tells you, not necessarily, because someone else is going to make just the same dumb investment against your position. They think it's going to go up. You think it's going to go down. Nobody's going to win. Okay? Yeah. So be careful. You can wait. You're not going to miss it. Miss what? Nothing's happening. Oh, but it's up and down. No, nothing's happening. It doesn't exist. So thank you, QuantBox, to make that so clear. I love it. Okay. That's actually a complex page to put together, by the way. There's a lot of different tables that need to go into that, but I love it. I also love this scatter plot. I really do. Yep. Remember, the scatter plot came from Denise's feedback. Denise designed this. Yeah. But she said, she would spend 20 minutes, Denise, kind of going through trying to figure this out. And I'm like, I think there's a better way to get to that same conclusion, Denise. So let's design this. And now we can do it in seconds. Yeah. Yeah, very cool. So thank you for sharing that at that presentation. So anyways, what we're looking at is everything good. Everything expected is up here. So that's good. Bullish and expected. Sweet. Pound Swissy up. Oil up. CAD Swissy up. Kiwi yen up. CAD yen up. Okay. NASDAQ. Well, I can't claim that to be, it's just a fraction above break even. But look, this stuff to the right, the further right it is, the further right it is, the more QuantBox expected it to go up. And then the higher it is, the more it actually has gone up. So the closer to here, the more accurate things are. So this should be way up, says QuantBox. It's only moderately up. This stuff should be moderately up, but it's way up. But up is up. Okay, up is good. Down is bad if you're a bear. QuantBox doesn't like the FTSE, and well, the FTSE's down. Cool. By the way, we just finished an audit on all the pages in QuantBox, and it's now in a contractual agreement. Every month, the developers are going to do a full audit, go page by page by page by page. Yeah, that would. Once again, you'd think that would be easy, right? But anyways, it's getting done. Let's just put it that way. So there's so much going on QuantBox. It's amazing. So anyways, right as rain. This stuff didn't go up. So maybe you buy a dip in the DAX today. The big thing we have to always try to look at, and this is where charts will come in, because remember, it doesn't get to this conclusion using much technical analysis, just a little bit of technical analysis. But if you thought, well, there was a potential, let's pick on DAX. Let's say the DAX has been bullish for a long time because QuantBox says it should be. But then we know at some point there'll be some sort of consolidation, right? For a while, that's just how a market works. And then there will be sort of another kind of like this. Even if it's not a full reversal, it could come down for a month or two and then go back up, right? So sometimes when you see this out of position, you got to be careful. Like, is it one of these little dips and it's a buying opportunity? Well, that's how you're supposed to use QuantBox. If it's bullish, and QuantBox says it's bullish because it's way to the right, but it's down today, and we know that because it's down, so it's bearish and unexpected. Well, that's actually probably your greatest opportunity to buy a dip. It's probably one of these dips. And so you should be able to look at it like, you shouldn't look at it and say, I want to buy all this stuff. Yeah, it's already gone up. Where were you yesterday? So you'd look at this and say, well, DAX is supposed to go up, but it's way down today. So you don't buy it blindly. This is where you would then log into your trading account, pull up your trading chart, do your technical analysis and say, is it a dip or is it a drop? Is it a dip or has it reversed? Why is it low? You should still ask these questions, and technical analysis will help you, in particular price action. Cool. So there you go. We have the new calendar. Probably not. By the way, the new AI service, traders.co, is happening. I've signed all the agreements. We've agreed on all the pay schedules and all the processes. Yeah, it's happening. And it's got, well, let's call it a really good calendar and then a premium calendar. Yeah. And so we're going to be calendared up, which is good, over on that service. Now, I don't know if I can copy the code, put some here. I don't know. I hope so. But it's interesting. Yeah, it's interesting. And it does some things that other calendars don't do. Cool. So anyways, I'm not happy with this calendar. We are developing a different and completely different look on QuantBox using the QuantBox technology, a completely different calendar strategy for calendars. It's not going to look anything like this. But if I don't like that and I like the other one better, I'm going to see if I can bring the other one over. Anyways, excuse me, I'm getting that 6:30 a.m. frog in my throat. All right. COT data we don't need to do today. Central banks we don't need to do today. We can look at how this week is shaping up. Right? Hang on a second. Got a hot mic somewhere. Got it. I got it. Turn mic off. Got it. All right. This is another way to look at what's actually happening in the market. Okay. There's lots of different ways to do the same thing. QuantBox loves to do that and it's good for us because you want to measure one way, see what the result is, measure using completely different methodology, see what the result is, measure again using completely different methodology. And if they all say the same thing, then it's believable. If you use the same tool the same time 3 times, obviously you're going to get the same result. So this is another way to say, like, is there anything actually happening? Excuse me, man. Oh man, must be the stuff I put in my coffee. All right, the biggest winner in the last 7 days, NASDAQ. Huh. But only 2.5%. That's not a massive week. Okay. And then you have Swissy week, Swissy week, Swissy week, Swissy week, Swissy week. Hey, do you think the Swissy is weak? Swissy is even weaker than the Aussie, and the Aussie is weak. Aussie's pathetic. Swiss franc's weaker. All right. It's informative, isn't it? Remember, this is updating all the time. These are 7-day rolling numbers, also daily numbers. You can see, ever so slightly break even today, which we've already looked at. So once again, we already knew that by looking at the scatter plot, but this is the scatter plot's pulling data from here, you see, or not actually this page, but it's pulling the table that produced this number, which is coming from a live feed, right? So anyways, very, very cool. Another way to look at it. I'm not even sure if you look at this page, but I like to look at it for the sake of swing trading. I actually had this page developed because I'm like, I want to see the 7-day trend. So this is mine, not Denise's. This one's mine. There are many like it, but this one's mine. So anyway, this is good for swing trading. So if you're like, I don't know what's going on today, scatter plots scattered, the risk gauges are mixed, zip over here. This is medium-term trends, right? Okay, look, Swissy is weak versus Japanese yen. Well, we already knew Swissy was weak. Okay. I think I even shorted Swiss franc yen earlier and made some pips. Yeah, I'm like, thank you. So it's another way to just like, are there any trends? Well, it seems like Swiss franc is weak. Oil was down very, very significantly. Remember, it made it all the way back to 71? And we talked about it. Could be a buy. So anyways, it's stabilizing, only down 3% for the week, but it was down 5 or something. So there might have been a nice little bounce there. So everything down here is bearish. Japanese stock market is flat for the entire week. That has been one of the most bullish assets we've had for years. For 2 years, it's been almost, consistently one of the best performers. Well, it's not now. It's not down, but it not up. And how do you start a reversal? By stop going up, right? So anyways, that's kind of interesting. I don't perceive yet a change of monetary policy at the Bank of Japan, but there is definitely some capitulation on the bullish side. That they've lost all bid. It's not quite bearish. Okay, look, and I've been teaching you this for a while, but here we are, and the Fed's not moving interest rates, and inflation is not going up, but it's not going down either. We're starting to slow down there. And so for the last 7 days, gold has done statistically nothing. And yet so many investors are so interested in gold. Everyone wants to talk about it. And I'm like, it's not worthy of your attention. Now, if you can think forward 6 months to 12 months to 18 months, which most people don't care to do, but you do, and that's why you're using QuantBox, then you have to say, well, what's the monetary policy going to be like in 6, 12, and 18 months? And what are inflation levels likely to be in 6, 12, and 18 months? With that kind of scope, you might say, well, in the future, maybe we want to buy some gold, or maybe in the future we want to sell some gold. But in current market conditions, it wouldn't be the thing to do. Okay. Yeah. And that's why NASDAQ is up and S&P 500 is up. So we'll organize our thoughts. And I hope I've made this clear over the last 3 weeks of like nothing's happening in the market. Well, good. Knowing nothing's happening in the markets is useful information. The second thing is, what do you do? What do you trade? What do you invest in when there isn't a clear intrinsic underlying trend? You stay away from dollar pairs and yen pairs, and you focus more on cross pairs. Okay? So again, if you look at QuantBox and it tells you there's no underlying intrinsic trend, well, that kind of knowledge, well, let's reverse it. When there is an intrinsic trend, risk on or risk off, you should know, and QuantBox actually tells you whether you should be buying dollar or selling dollar, whether you should be buying yen or selling yen, for example. Okay, so it makes that clear. When it goes mixed and there's no underlying intrinsic trend, that's where you go to cross pairs, like pound Aussie. QuantBox like, dude, there is no score bigger than that. Okay. Now some of the yen pairs are moving. That has a lot to do with seasonality. And on the flip side, can I drag that down? I'm going to drag that down. Aussie dollar, Aussie Kiwi, Aussie CAD. Or I said Kiwi, but it was Swiss, right? Let's start over. Aussie dollar, Aussie Swissy, Aussie CAD, Aussie Kiwi, even Aussie yen. Maybe we should look at selling some Aussie. The thing is, this has been here a while. This didn't just happen. These are very negative scores for very negative reason. It's very clear. You should probably, and maybe I should in these presentations, start the routine there and reaffirm. This page is much longer term. In fact, you might look at this page and it tells you nothing because you're like, well, I can't tell if anything's changed, right? Are you guys getting this? Did you get the smart alert yesterday via email? Yeah, I didn't even send that one. Yeah, I've automated that process. So for those that have paid for the AI alert service, you got an email yesterday, and unfortunately it's at 9:28, so it's pre-New York. It's fine. I'd like it earlier, and it will come out twice a day instead of once a day. But hey, once a day is better than 0 times a day, right? So in that report that people upgraded their account to receive, it analyzes this page. And it just says, hey, Denise, this went from a -9 to a -10. Why? Oh, this went from a -1 to a -2. Nice. And now you just know. It just shows you, because humans are not good to see this pattern, especially when they're slow. Was this a 0 yesterday on pound CAD, or was that a -1? Like, you would never know, right? I'm like, look, dude, it's right there. Are you blind? You're like, dude, I don't remember that, right? So that's why you have AI. And so it wrote an email yesterday to say, wink, wink, nudge, nudge. Did you notice that? Of course we didn't notice that, but now you know it. So anyways, cool. So maybe you can pay more attention to this page. Okay. Because I'd hate for this to have been bearish and you miss it. Like, for example, let's actually pick on one. Let's pick on one. Let's see what's up. Sup? What's up? Let me show you this tool. Pick an Aussie, Aussie yen, Aussie Swissy. Okay, well, we'll do, well, no, that's week versus week. That's, I mean, actually, I don't know. Do we really want to do that? Let's do Aussie dollar. It's probably more traded anyways. Okay, well, it was a bigger number before. So going back all the way 30 days, going back to the very beginning of January, this pair has always been bearish. Okay. Hey, Boris, just email me, Wayne at fxbootcamp.com. I will check that you, well, if you got the previous ones, and then check your spam and all that. I think it would have been titled the same, but that's right. I would have done the same thing to, yeah, the way I automated things, it would have been to pull the same list. Did this person buy the AI alert service? Yes or no? And if so, then send this. I think you would have gotten it. If so, check the spam and stuff. I think it would have been called something like new AI alert. And it probably came from quantbox.ai.alerts@gmail.com. Something like that. Yeah, it didn't actually come from me. Yeah, yeah. So it comes from Gmail, which is really funny because when you look at the Gmail account, there's no incoming email, only outgoing email, which is really nice. Okay. The title was Smart Alerts in the Last 24 Hours. Thank you, Denise. Yeah. Yeah, right on, Boris. I'm glad you found it. I would like to rewrite it so it doesn't get there, but I got too much going on the development side. My developers will go into a cave and disappear for 3 months if I say, let's rewrite the emails, or, change the way that the bot writes the emails so that it's less spammy or whatever. But there's only so much I can do. You don't want to mess with it. But anyways, going back to this is like, you need to have been short Aussie dollar. And it's one of these things like, here's what I think probably happens. You still trade exactly the same things you've always traded, irregardless of all this information. And if that's true, and it probably is because you're human, then you need to, well, try to slowly change the habit. So if QuantBox has been screaming at you for weeks and you're not paying attention, you need to pay attention, right? It's sort of like, I don't know, an animal that's ignored, right? Starts chewing on your slippers, right? You can't get mad at it. You're the problem, right? You can't get mad at it. Pay some attention to your dog. Take your dog for a walk. Go throw some tennis balls out there. It just wants to seek your love and attention. Well, QuantBox is just seeking your love and attention. So change your habits. If you're missing some of these things, I mean, every single day, it's screaming louder and louder every day. Okay. And of course, Murphy's laws, now that I've made this clear, it's going to change and start going up. Well, whatever. So message should be clear. you know, look at more of the pages, figure out the order in which you want to look. Are you only looking at the short-term stuff? Well, then add the longer-term stuff. Okay? Right? Start organizing the process because, well, I mean, I guess that is the most bearish score. A negative 12, I think, is the maximum. Then we could look at something. So we can do. I'm holding my coffee in my other hand. That's why I don't want to type it, but we'll do it. You could pick like, well, how does that compare to Euro Aussie, Pound Aussie, Aussie CAD? Like a lot of these things, I just don't really trade. And it's not as bad, but it's bad, meaning down, bearish. So if you've forgotten what this is, this tool, these bars, in this case, they're all negative bars. This is the score on that day that QuantBox gave for pound or for Aussie CAD. Day by day by day, what did QuantBox tell you? Going backwards. See, isn't this nice? Going backwards in time. So this is a sort of like the bullshit litmus test, right? Like it's the bullshitter test. What did it actually say, right? You can go back. This is what it actually said on those days, which is kind of nice. And then the overlay here is actually the price data day by day for Aussie CAD, which is kind of nice. So we pull that from a pricing feed, right? And then we overlay these stats. So this database is what was the score on each day with an overlay of what was the closing price each day. And QuantBox was very, very, very bearish, even though it took over a week, almost 10 days for the fall to start. Well, QuantBox was already very bearish before it even started falling because technical analysis is only a small part of the analysis. And then fall it did. Okay, which is neat. And I don't really trade Aussie CAD, so I didn't know what it was going to show when I pulled it up. I don't really trade it. Well, I threw out some good fish in that net. You know, like I could have been fishing in this pond. Cool, I could have. Okay, so interesting. So that's very powerful. And then, of course, here's the score for today. The idea. Now, see, look, the audit missed that. It's -7. There's no way that's neutral. All right, -7. In fact, I'm going to do that. Snip it. Snip. I'm going to. Oh, yeah. Look at that. I did a snip. Yeah, look, so I was at the St. Louis Fed yesterday, and we're talking about arbitrage. I did a class on arbitrage. Which is nice. I guess I have to save this. I have a bunch of them. Fed, I think it's Fed 5, Fed 5, I guess. So anyways, yeah, there's our class. Non-confidential. Good. All right, good. So I accidentally shared that. All right, let's do what I wanted was this. Good enough. Good enough. I want to give feedback because we just finished that audit. And I'm like, well, what the heck? That's obviously bearish. Probably very bearish. So I got to let them know. So, wait, I can't do it. I have to do it this way, right? Save. Done. All right, cool. cool. So screaming yell at somebody today. I wasn't going to do charts, but I got to look at the charts. All right, let's just do this one and then call it a morning. So we're already looking at whether we're at a top. The reason we don't need to do deep dives going through all the charts is we've already seen everything. Again, the gauges tell us there's nothing going on. Some things are up, some things are down. There's no relationship to any of it. Okay. So anyways, I have looked further out, and in my analysis of monetary policy versus market conditions, I have a bias that the Dow should come down for a while. Okay. And it just is now showing the sign of maybe. This is what I've drawn quite some time ago. And maybe it's happening. It kind of looks like a head and shoulders type pattern is forming. And maybe we get back down to the central pivot point. Not a big move, but it looks like this might be forming over here, right? Cool. And that's how I'm kind of looking at the market. Now, if that starts to happen and we see it across the board, not just Dow, but in other asset classes, that's risk off, by the way. So if other asset classes start showing signs of more risk off than neutrality, then we will see it across the board and there'll be an intrinsic underlying trend. There isn't one now, but I'm playing the game like there will be. So I can still trade, but it's sort of like the birth of some risk off. It hasn't quite happened yet. Now, I did have that opinion earlier, and I am in a triple leverage short on the S&P 500. So I was more aggressive than the market was. And that maybe is sort of a complimentary slap in the face, but maybe I was too smart on this one, where I just was sure it was going to happen, and then it hasn't happened, but I still agree with what I did and why I did it. It's just like everyone else disagreed, right? Like, so anyways, so I got caught on this one. I think, you know, it would have been, I think it was in here somewhere. Yeah, I think I'm short in here somewhere. And so my thought process, well, first of all, Dow seems to confirm that this wants to come down. The second part is if the market is thinking the Fed is not going to cut in May, then at some point it should make a lower high, lower low. There, okay. So the hedge isn't working now, but that's not actually true because a hedge is a hedge. So the hedge will only lose if it keeps making higher highs. Well, it stopped making higher highs, so it's working. I'm just sort of neutral in here. And then if this starts falling, as I think it probably will, and that's the whole point of a hedge, I think the probability is that down, then I will make money on my hedge, which will offset the cash position losses. So, I mean, it's actually working. Unfortunately, my cash position's making money, but not the hedge. But once again, that means it's working. So whatever, either way, I'm neutral at the top. And I'm neutral at the top, not that I don't think I do want it to go high, but I don't want it to do it till March based on my analysis of seasonality. So anyway, so I'm neutral at the top. And Dow shows more capitulation of the potential for the downside. You know, bulls might give up. And then, right, you want to do, I'll probably do this at Forex.today. You know, you want to keep watching your Fed watch tool and see if if the odds for May are shifting to the right. If so, that'll shift this down, and that will shift us to risk off, and that will shift us to buying US dollar, maybe some Swiss franc. Maybe some yen. Well, the yen's been weak. The Swiss franc's been weak. Yeah, well, that would change. Probably. Cool. Hey, that was fun. That was cool. Right on. So I will see you later this morning, I am sure. That being said, this is a great time to be alive. This is a great time to be a trader investor. Yeah. So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day, but be careful. Cheers.